Lennar has built its success not only on quality construction and sound business practices, we're also very aggressive in monitoring industry trends and moving fast to take full advantage of them. While there's a reliable and proven market in Lennar's core business of single-family home construction and sales, there's also a huge and rapidly growing rental market. Leveraging our construction expertise alongside the strength of both our industry relationships and our balance sheet, we've created two companies to capitalize on the booming rental market and create institutional investment opportunities. The first one we'll talk about is LSFR, Lennar Single Family Rentals.
Hello, everyone. My name is Kevin Harrell, and I lead the investor relations and business development function for Lennar's two vertically integrated investment platforms across single-family rental and multifamily. Previously, I held similar roles at GWL Realty Advisors, the real estate investment management arm of Great-West Lifeco, as well as Guggenheim Partners. Prior to my tenure at both of those firms, I worked in banking, as well as consulting for a number of years, serving insurance, banking, and capital markets clients globally. I've been speaking with institutional investors and their advisors most of my career, and it's been terrific to be part of the leading platform and sector as important and fundamental as housing. Single-family rental homes have been an integral part of America's housing composition for decades. Prior to the mid-2000s, as homeownership rates hit their peak, there are approximately 12 million single-family rental homes across the country, and residents largely rented from part-time landlords who owned additional homes as investment properties. Beginning around 2011, as the market provided ripe opportunities due to the housing crisis, investors jumped at an opening to bring a broader platform and institutional level expertise to the SFR industry, much like the conventional multifamily industry was institutionalized around the early 1990s. As a result, the single-family rental industry has been the fastest growing segment of the housing market since 2006. The industry has grown 30% since 2007. Institutionally, single-family homes emerged as an investable sector during the Great Financial Crisis in 2008 and 9, when private equity giants like Starwood, Blackstone, and Colony Capital started buying large portfolios of homes that were held in distress by banks who had made faulty mortgages. This strategy was really born out of distress, which is much different from where things sit today as an enduring sector that isn't rooted in simple pricing arbitrage. The resulting formation of these large-scale portfolios yielded the dominant single-family public REITs today, namely American Homes for Rent and Invitation Homes. Setting aside this outsized growth for a moment, the SFR industry is still in nascent stages, with only 2% of the current SFR housing stock owned by institutional investors. Further, while the public markets are relatively well established, private offerings on a national scale to institutional investors remains extremely limited. More on this on the next slide. One of the biggest demographic tailwinds that is driving SFR, much like multifamily, is a large addressable market. Nearly 40% of the 123 million occupied housing units in the U.S. are rented, with SFR and townhomes accounting for over half of the rental stock. This rental population is dominated by the millennials. Millennials have historically had a higher propensity to rent due to low savings, increased debt due to student loans, and historic high housing prices. As the 35 to 49-year-old cohort, which is expected to rise in population nearly 20% in the next 20 years, enters major life milestones like getting married and having children, demand for larger rental space will continue to increase. Unlike conventional multifamily, new construction is not the main source of new supply for the SFR industry. The lack of housing supply and historic low production volume in the U.S. that was rooted during the years following the GFC has exacerbated the lack of availability of affordable rental options. To further this point, just 14% of SFR stock was built after 2000, and 65% was built prior to 1980. As a result, the latest industry trend that is taking hold in a meaningful way is the build for rent model, BFR. BFR has essentially become the holy grail of SFR, as it solves two of the main criticisms with the business model. Number one, traditional SFR homes are older, requiring substantial capex. And two, larger SFR portfolios are typically hard to consolidate in micro locations, making the physical dispersion of a portfolio of homes very difficult to manage. Purpose-built SFR and master plan communities have tremendous potential, and institutions are taking notice. Lennar's status as the nation's largest home builder provides natural structural advantages for a BFR strategy. Lennar has been building homes in the U.S. for over 66 years and retains a market-leading construction platform in-house. In aggregate, Lennar's forward pipeline of home sites is larger than the entire SFR rental stock today. This presents a compelling ability for investors to gain immediate scale in a sector whose biggest issue is new supply. This slide makes an effort to simply compare two very different rental sectors, SFR and multifamily. As you can see in the graphic, while SFR is still viewed as an emerging sector with very limited institutional ownership as compared to multifamily, public SFR REITs are trading at more favorable cap rates and projected to have more than 50% more NOI growth than public multifamily REITs in the next 3 years. One key driver of this trend is the fact that SFR has exhibited much lower turnover, 30% on average, versus multifamily, which is more like 50% on average. And the institutionalization of SFR operations are tightening margin spreads. When one considers the number of investment platform offerings for private investment vehicles accessing or building SFR portfolios of over 20,000 homes, today there are only about half a dozen. Investors simply don't have many scalable options when looking to gain diversification in the private markets. Lennar brings a unique approach to this facet. As discussed before, the millennial population continues to drive strong rental demand, with an estimated 6 million people aging into the 35 to 44-year-old cohort over the next 10 years, alongside their demonstrated higher propensity to rent. This represents a meaningful supply-demand imbalance that continues to persist. This dynamic is even further exacerbated by shortages of lots, labor, lumber, and other materials that lengthen construction times and lower margins. In short, you are seeing a rise in rental housing demand driven by robust demographic trends, with a shortage in supply. This slide considers the major differences between existing multifamily and single-family stock available to renters. As is displayed in the graphic to the right, single-family picks up where multifamily leaves off when it comes to number of bedrooms. While roughly 65% of single-family rental homes are 3 bedrooms or greater, only 11% of the existing multifamily housing stock has at least 3 bedrooms. This is notable because young families that do not have the ability or means to own their home tend to target single-family rental homes due to the design. These homes are the inherent increased space that is afforded over multifamily, serve as the hub of their lives, functioning as offices, schools, gyms, restaurants, and entertainment, all under one roof. The resiliency of the sector during downturns is another meaningful benefit for institutional investors. While institutionally owned SFR is relatively new, when one looks back over the last 36 years at the John Burns SFR Index, NOI growth has averaged 3.4% and remained positive even during recessionary periods. This is due to strong rent growth and continued improvement to the sector's operating margins. Ultimately, large institutional demand for SFR highlights recognition of the sector's strong cyclical hedge, sticky resident base, increasing margins, and supply shortage, which is expected to drive further cap rate compression in the coming years. As we've shown before and stated before, ultimately, a key tenet of the attractiveness of the residential sector both single family and multifamily, is its lack of supply and the production deficit that became even more pronounced during the GFC. Because housing starts didn't catch up with post-global financial crisis demand, renters and buyers face limited options for fulfilling a very basic need, housing. This also has created an affordability crisis in the U.S., which has been well documented. Even with a significant delivery uptick in multifamily and single-family homes since the financial crisis, a significant supply imbalance persists. SFR is well on its way of being recognized as a staple for institutional investment portfolios due to its compelling demographic-driven tailwinds, proven resiliency during recessionary periods, and ability to provide investors with comfort in addressing a major social issue in the U.S., housing shortage and affordability.
Lennar Multifamily Communities is an innovative, collaborative, and fast-growing company with a diverse portfolio of properties in markets across the U.S. It was launched in 2011 and is already the fourth largest multifamily developer in the United States, building unique and high-quality multifamily assets in growing, diverse communities. In addition to experienced executive leadership and the backing of Lennar, a key to their success is their thoughtful approach to multifamily development. LMC's top priority is delivering compelling, risk-adjusted returns for its institutional investors.
The LMC platform is really vertically integrated. We have development, construction, property management, and investment management. And there are a lot of people who do investment management only, but they're not operators. A lot of operators who aren't developers, and a lot of developers who aren't contractors. We do it all.
Our objective was every market we entered, we wanted to be a top 5 developer in that market. Lennar is a market leader on the home building side. We want to be a market leader on the multifamily side.
At LMC, we benefit from the combination of scale, purchasing power, expertise, and the people that we have on our team. As a wholly owned subsidiary of Lennar, we're part of the largest land buying power in the country. We are buying more land every quarter than anyone else.
We have broken ground on 95 communities at a total cost of $9.7 billion. And we've been here 9.5 years. And that's like starting a $100 million community every 4 weeks. So we've been really quick in our growth pattern.
LMC Investments serves as the investment management arm of the firm, offering global institutional investors an array of strategies and structures across the risk spectrum. It provides access to one of the best performing property sectors over the last 30 years, through a vertically integrated platform with unmatched scale and depth.
LMC Investments is the investment management platform for LMC as a whole. We oversee the deployment of capital into multifamily assets. Further, we help manage investor reporting, compliance, accounting, asset management, and ultimately dispositions of assets.
We have raised 2 funds, LMV, which is Lennar Multifamily Venture, and LMV2. We've raised over $3.5 billion of equity through those 2 vehicles. We also have a forward pipeline of another $4 billion worth of land bought and/or land under contract.
LMC's integrated investment strategies not only fund its rapid expansion, but they deliver outstanding risk-adjusted returns, leveraging every aspect of its financial backing alongside its collaborative and experienced culture.
We're blessed with a large co-invest that far exceeds many of our competitors. The typical developer is going to be putting in 5 to 10% of the equity at most, whereas our typical co-investment is 10 to 20%. We really put our money where our mouth is. Further, the completion guarantees that we're able to provide on the development side are unmatched. We put up Lennar Corporation's public balance sheet to guarantee completion and costs. No one can compete with that. One of the big benefits that we can offer investors is that we don't ask anyone to take entitlement risk along with us. If we're going to buy a property unentitled, we'll take that risk ourselves. By the time we're bringing in capital, we know what we're building. Therefore, we're able to know our costs much better, know our returns, our rent profile, as opposed to asking someone to go at risk with us. Our product offering is as diverse as our pipeline. We're accustomed to open-ended funds, closed funds, programmatic joint ventures, separate account investments, and a variety of other vehicles that we can accommodate.
The life cycle of LMC properties begins with development. A full slate of vetted opportunities and a deep understanding of local markets.
At LMC, we benefit from really strong developers out in the field, which allows us to have a strong pipeline going forward at all times. We're typically running at about 40 to 50 different pipeline opportunities, ranging 5 to 6 billion of development costs. Really allows us to meet investor demands and needs.
It all starts with our pipeline, and you cannot generate pipeline in a community without having a presence and a commitment to that community. So pipeline is what fuels our business, and local knowledge, local commitment is very important to success.
Real estate is fundamentally a local business. It's hard to be a national business. It's very much a local business, so we take a lot of time in selecting our division president there, as well as the regional property managers and the regional construction personnel.
A key component to integrating the platform's capabilities and ultimately a successful development is LMC's DevCon protocol.
It's bringing everybody up step by step such that development, in construction, in property management, all are in sync, because you just don't want the development company designing everything if they're not listening to what the customer wants. Well, the management company is who touches the customer the most. And what if the construction company says, well, there's a more efficient way to build what you're saying, what you're prescribing. So we really have a real collaboration agenda here, and it's really helped us a lot.
LMC Living participates in the DevCon protocol from the very beginning, looking at floor plans, amenities, what's important to our residents in a particular market, what are we seeing within our peer group.
We are integrating ourselves early in the design and using our construction expertise to make sure we are building efficient means and methods, and that carries over. We have a seamless transition from our design team to our estimating team to our operations team, which keeps us ahead of our competitors on the curve.
The objective there is just collaboration, transparency, respectful communication, make sure everyone that is a stakeholder in a project has a seat at the table.
LMC's communities are built by its in-house construction division, earning awards for quality, safety, and sustainability. This building success translates to extraordinary spaces for people to call home.
We have national purchasing agreements with some of the major manufacturers, so we buy much better than our competitors because we have the scale, and ultimately drives our basis down and increases the returns to the investors.
LMC's property management arm, LMC Living, fills the community with vibrant life and ensures operational excellence on behalf of its investors.
We have hired a fantastic team of on-site associates that really are attentive to our residents and building neighborhoods where people are happy to call home. The environments that are created on site by our teams really support our resident retention efforts. And because our residents are happy here, they're more likely to renew. And likelihood to renew is important to our investors because it increases occupancy as well as rental rate. Our resident retention on average for LMC is somewhere between 55 and 60%. That's higher than our industry average. And we believe that is because we spend so much time focusing on resident retention, engaging our residents in community activities, making sure that they have friends within the community. LMC Living's on-site associates are critical to the performance of our assets, and just really proud of everything that they've accomplished.
Backed by Lennar and driven by sharp, forward-thinking leadership, LMC has firmly established itself as a market leader in multifamily development, and the future is brighter still.
We have the infrastructure and the leadership in place to be a business that's probably 2 or 3 times larger than we currently are.
We have built a very strong organization across the country. We have good people at every single level. We've been able to build a diversified portfolio geographically and product type, high-rise, mid-rise, and garden. I think the blended returns we're able to offer our investors are very, very strong.
I'm really proud of the caliber of development that we do because of the caliber of associate that we've attracted, as well as the caliber of investment partners that we've attracted. So we've really grown something very special here. Looking forward to the future, though, to continue that growth with the same caliber of investors and associates.
2012, Lennar began looking outside of the U.S. for buyers. With steady immigration and a strong interest around the world in U.S. properties, Lennar began increasing its international profile.
Lennar founded Lennar International about 8 to 10 years ago with a focus on tapping into the Asian real estate investment market and the market's interest in investing in the United States. When I first went to China and when I first went to Asia in 2010, I said to our potential clients and investors at that time, Lennar cares. Lennar cares about this investor from this part of the world, and Lennar is going to stick around and be here through cycles and be here as a quality investment opportunity for the people in this market and for the institutions in this market who are looking to invest in the United States. And that's exactly what we've done. We've been here every month, every quarter, every year since that first time that we ventured across the Pacific to connect with the people of Asia. The first American home builder to do so in a consistent and persistent way. And so I think our commitment through Lennar International to global investor interest in the United States is clear and has been sustained through multiple cycles at this point.
Foreign institutional investors are very important in any economy, and they can bring in many new untapped resources we don't have access before and very enriched perspectives. That's why for Lennar, we care very much about every foreign institutional investors we will work with and we are working with and we worked with before. For foreign investors, one of the major focus is diversification. And for Lennar, we can provide very diversified products to meet the different needs of different investors.
So that we can not only tell the Lennar home building story, but we can also tell the Lennar investment story to communities of investors all over the world.
In the time we have remaining, we'd like to show you some of Lennar's largest and most exciting projects. Now, with some closing thoughts, here is our Executive Chairman, Stuart Miller.
Today, and for the foreseeable future, the home is becoming more and more the essential way to live, that we live, and the quality of our lives. The home used to be just shelter. Now it's the hub of our entire life. It is our shelter and our multiple generation shelter. It is also our office, our gym, our recreation center, and our school. It is Wi-Fi connected and it is automated. It is sustainable and it is environmentally sensitive. It is both a healthy home and a health system. Home is where families thrive in the best of times and a refuge in the toughest of times. At Lennar, we've never been better positioned financially, organizationally, and technologically to thrive and grow in this evolving and exciting housing market.